Well, hi everyone, and welcome to the Design VC, the show where design meets business and creativity meets capital. And I'm your host, Andy Budd. Each week, I'll be talking to founders, investors, and designers about the role design plays in the world of startups. And today, we've got someone that does all three. So, I met today's guest around 15 years ago, actually, when she made the leap from being a designer to running her own VC backed startup. And in fact, she was the first person I knew that had made that leap from design to startup. She's then written a host of books and spoken at conferences and more recently moved into the world of venture capital. So Tracy Osborn, welcome to the show.
Hey, thanks for having me. It is so wild how fast time flies because you're right, 15 years ago, it's mind blowing.
It is. I remember sitting at a conference table chatting to you, and you were telling me how you were doing all this amazing startup stuff, and I was blown away. So, yeah, I had to look it up, and I was like, wow, that's about 15 years ago. So,
I think it was like there was South by Southwest, and then I think I came in to Brighton and harassed the whole team at one point. Her team.
absolutely, would have almost been certainly been a South by Southwest. So look, as I said in the intro, you were one of the first designers I knew to make the leap into running your own startup. I know if you could think back a little bit about to those early years, like what encouraged you to drop design and become a founder?
Yeah, that was a really fun transition. There's several factors that played a part in that. One of them was I started doing design contracting, and my husband was going through Y Combinator at that time. And so, as someone wanting to pick up new clients, I was brand new to the game. I've never really worked with clients before. The easy resource were these Y Combinator backed startups, and so I did quite a few different website designs for some that are still around for. Dot Cloud, which is now Docker. So I did one of their first websites. Rapportive, the founder of Rapportive is now the founder of Superhuman. But when he was working on Rapportive, I worked with their teams to create the first version of the website. And I want to say that the website still exists because LinkedIn took it over, or at least it did until like a couple of years ago. And they just butchered my design. They just like made updates to it, but they left in the source. There was still a source thing saying like designed and done by Tracy Osborn. And I thought that was so strange that LinkedIn came over, bought their company, took over this landing page that I created, and then didn't remove the source thing, that was really baffling to me. So I was surrounded by entrepreneurship. My husband was also going through Y Combinator. The thing is, I found that I have a lot of opinions, and I have strong opinions, and there's ways that I thought were the best way to go about things. But when you're a contractor, when you're a freelancer, you know that the clients always win, right? You want to make them happy. And so I was getting more and more frustrated working with these folks. Not necessarily Cloud and Rapportive were great, speaking about other people. But at some point I was like, you know what? I just kind of want to just do this myself, And I'm watching them go to the Y Combinator meetings. This was also early days in Y Combinator where I was an employee of Rapportive for a little bit. And as an employee, I got to go to the YC dinners. That was super fun. That's not something that happens anymore for employees because Y Combinator is too large. So I got in right at the right moment, got to come to the dinners, meet Paul Graham, Jessica Livingston. I think they thought I was a fellow founder for a while there because I just kept showing up to every event I could and was really inspired by that world, and that feeling of, oh, I could do this better. Then it started being like, okay, well, what can I do? What can I build? How can I control the process and launch the process and be in charge? And so that was really what started me to the process of learning how to code so I could launch my own thing.
Brilliant. I mean, I think I've spoken to a few people that have said that Y Combinator was a huge influence, either them being on the program or just them being surrounded by other founders. Most of the designers I know are like surrounded by other designers and agency founders. And so the natural tendency is I'll start my own agency. I think it's really important to have other founders around that you go, this feels like a real thing. This feels like a possibility. It doesn't feel like this alien thing. And so I think particularly the time you were in YC was like a real kind of upwelling of energy and excitement. So it must have been a really fun time to be there.
It was really cool. I think like that's one of the things that I have learned sometimes the hard way of how important the community is for inspiration. If you fast forward through my time of running my startup, I never got into Y Combinator, but my eventual startup, I actually ended up joining 500 startups. And then I went too far into my way is the best way. I'm not going to listen to other people thing. And I was heads down working on my business, and I didn't really talk to the founders that I had in 500 startups. I didn't really talk to anyone else or take their advice seriously, because I had this, like I said, I went way too far. I was like, now I'm the founder. There's a way I want to do things. And this, now in hindsight, I look back on that is as something that held me back, something that I talking to these founders of YC and seeing how they do things and like, that's really awesome. And then shutting down the collaboration process or basically my philosophy now is that other people have the shortcuts, and you can talk to a bunch of people and learn from them. And by learning from them, you don't necessarily take everyone's advice verbatim, but the more information you bring in, the more people you talk to, the more shortcuts in anything in life will become apparent to you. So it was funny, like to say, talking to these startup founders, I think it gave me a shortcut in terms of like, okay, startup life is not that hard. And then I spent 9 years working on Wedding Lovely, not really talking to people. And in hindsight, really should have. And so now I think I've reached this interesting balance in my life of startup founders are wonderful and great to talk to, and it's very inspiring to be into that world. But there is a period of my time of where I was not communicating as much as I could, even with that knowledge.
I mean, I think community is so important. I think founders can get very tunnel vision and your eyes are on the prize. And I think actually making sure that you talk to other founders, like you don't have to solve everything from first principles. And there's a massive community out there, which I'm sure we'll get onto in your time at TinySeed. But I'd love to take you back to Wedding Lovely. You've sort of touched on it already. Like, how did that start? Like, where did the idea come from, and what were the first few years like?
I love design, and I have always been fascinated by wedding invitations. And I thought that maybe that was a good way to get into the startup world. Maybe I can use my passion for design and bring it to folks who don't have an eye for design. It first started out as like, how do I create a website that will help people design their invitations for them to have, and then like the instructions to like go to a printer or even like print at home. This is me learning how to code, realize that PDF creation and trying to get perfect typography in PDFs would be just impossible. So I pivoted my idea to like, how do I make it easier to work with designers? And so that was the core idea, was wedding invitation designers are out there. There's a lot of really amazing folks who are doing these beautiful wedding invitation designs. How do I help folks who are planning their wedding get connected with their designers, see the work that they're doing, help just make that process easier so that designers get more work, and then folks who are getting married get better design. Wedding Lovely ended up expanding out from that, because once I launched how to find wedding invitation designers, then it was like, all right, cool, I'll just like launch it for every other category. So then it was like a website for finding wedding planners, and a website for finding wedding photographers, and a website for finding wedding venues. And then I was like, okay, now I have all these websites. How do I combine them all into one website? And that's where Wedding Lovely, the platform, launched, where it's like you signed up, you're getting married, you get signed for this platform, you get connected to all of the vendors in our network, but then also have these like checklists for people planning their wedding to like make sure they like understand like, oh, they should do this, they should do this, they should do this. And I should emphasize, one of the things that I wanted to do with this was also, at the time, you'd sign up for it and they'd be like, you have 400 things to do. And I was like, oh, I hate that. So I wanted to be like, here are the big things that every wedding generally does, but I wanted to have a counter influence on the wedding industry and make it easier for people to feel okay going counter to the narrative. There was like a little chat widget on my website, and I had a woman in, I want to say it was Australia, who was marrying her partner, who was also a woman. And she was saying, I don't know what to do because all of our friends are all of our friends. And how do all the literature on weddings would say, oh, you have to have like the bride's people over here, and then the groom's people, or the other bride's people over here, and like, what do I do? And I was like, the world is your oyster. Like, what do you want to do? Do you want to have like everyone behind you, like in a semicircle, supporting the both of you? Like, there's so much wedding information out there that was so aggressive, that this startup was also an opportunity for me to tell people that it doesn't have to be that way. That at the end of the day, weddings are meant to be a party that you sign a contract in. And then I also just like, let's work with local businesses. I love working with small businesses. I want to encourage people to work with small businesses and work with other individuals and make that as easy as possible. So I was able to combine two big passions of mine of small businesses and countering the wedding industry and all that into one website, which like I should say, it ultimately never took off. And there's things to say about that in terms of the wedding industry being such, I will never recommend anyone to launch a startup in the wedding industry ever. But it was a really fun 9 years of my life.
I was going to say, it feels on the surface like a really great idea. I mean, like every person that has a wedding has to go through the design process of doing invites. You've got to kind of, like you say, find wedding planners. You've got to have, manage kind of like gift lists and all that kind of stuff. People are willing to spend a lot of money. And so there's a good amount of value you can capture in that. I guess one of the things I wonder just around timing is, these days everyone's incredibly digital. Everyone is sending out invites electronically and, but I wonder like starting sort of, when was it, like 15 years ago, like how did the timing affect, like, do you think if you'd have started it today, you would have had a different experience?
That's a good question. I think the digital process was already happening back then. Wedding websites, I think, were really taking off at that time. And at one point for Wedding Lovely's life, 1/3 of my revenue was coming through a single blog post I had on my blog that was talking about wedding websites. And those wedding websites are all affiliates. Just because every wedding website maker out there had an affiliate code. And I was, as the blogger, was like, okay, of course I'm going to add the affiliate code here. And it was just raking in money. Everyone was like launching wedding website builders and jumping on the wedding website builders. And those builders would have evites and all that stuff built in. I even created my own little wedding website builder within Wedding Lovely at one point. So that digital transition was already in the process of happening 15 years ago. That said, the market conditions are still the same, which would make it hard for any wedding startup out there to exist. Being that, you have guaranteed 100% churn. And people had told me this when I was building Wedding Lovely, but I was so stuck on the idea of this is something that needs to exist, and therefore I'm going to bully it into existing. And I now have a more tactical mindset for the things I do, and I wish I could impart that on my former self, where it's like, you got to think tactically about this. You have to think about the amount of effort required if your primary customers are folks getting married. That's why the Knot has all these other services out there for like building your home and babies and all that kind of stuff, because they're like trying to capture, future payments from these folks. I never really appreciated how devastating churn can be and how hard it can be in a industry to constantly find new customers, especially in the wedding industry, which that's very advertising driven. And therefore everyone expects you to advertise. And therefore all these big platforms have really high rates for advertising because there's so many things being launched in the wedding industry that you can't really like rely on advertising. So then you have to figure out other ways of getting the word out. I did the smart thing, the only thing I could do, which was partnering with businesses being that, also a customer that won't churn after a year, and trying to like set up systems so that they can refer their clients in. I don't know if I ever did that correctly or like as well as I could have. There's a lot of things that, in hindsight being 2020, it's really easy to nitpick previous decisions. But just like the wedding industry is really hard to be in because of this, the 100% churn on the wedding side, the relative amount of things that are happening on the services side. And there's the, thing where people are paying a lot of money for a really big event, which oddly makes them really interested. They want to look for things that they can save money on to justify all the big expenses. And so if they can save $100 on a website platform that they could use for planning their website versus like creating the binder, they're probably going to do the binder instead, because they have this, psychological thing of like, okay, cool, I saved money by not paying for this website and I'm just going to do more work instead. Like that's like kind of the way that weddings are planned. So it's hard. I actually got married during my time of working at Wedding Lovely, and I eloped in Las Vegas. I didn't even have a wedding. It's the cobbler's children has no shoes, whatever that thing is called. I am still very bearish on the wedding industry and the what goes on in there. I do not regret eloping. In the end of the day, my wedding was going to be like $400, including hotel and all that. Did a little white wedding chapel in Las Vegas. Never ended up having a party, which is my one regret on that. But it's like, the wedding industry is nuts. I feel like there's a lot of things that could be changed within it. But the problem is it's like a very cultural thing. And then the business metrics themselves don't really make sense if you're a business launching into that space. It just makes things hard.
You make some really great points. I mean, I think I meet so many founders that want to just breathe life into their brilliant idea. And the ideas are great and they should exist. Mm-hmm. But like you say, in the wedding industry, maybe not exactly 100% churn, but there's a very, very high churn. And then people aren't going to come back for another 3, 4, 5, 6 years, And so the idea is good, but the business mechanics aren't good. And I think a lot of founders only start thinking about the business mechanics a little bit too late because they just want the thing to exist. I'm curious, as a designer, as a design founder, what do you feel you brought to the role as a founder? And also, where did that kind of maybe trip you up? And how did being a designer maybe make you struggle at times?
It's a great question. I would say that both my superpower, but also my super pain would be the attention to detail. I think designers are really good at that attention to detail because we are thinking through, for both the UI, the way something looks, the way they use, or experience the product visually, but then also the thoughtfulness that comes into building an experience. So how is someone experiencing the platform? How is the onboarding set up to make things easier for someone to sign up and make them feel comfortable? This is the stuff that is my favorite part about building as a designer, is just putting myself in someone else's shoes and trying to think really thoughtfully about how they're going to be experiencing the thing that I have built. And there's try to have a very strong attention to detail for all the little things. Of course, this makes things slower, and it's hard. It's hard to when you're running a startup, you kind of have to move fast and break things. And there is this instinct that needs to be built as you are growing in your career to know where the attention to detail matters versus when you just got to get it up and out. And realizing, I think in a lot of things I do where I can see all the ins and outs and everything and how things are happening, but I have to remember that the person I am designing for often doesn't see any of those things, or the vast majority of people don't see those things. And so I have to release this uncomfortableness I have when building something, being like, oh, it's not perfect yet. I have to release that instinct and just get something up and out. And I think that's something I didn't do as well during Wedding Lovely, but it definitely trained me to doing it once I realized how fast I had to execute in order to work on this platform.
I mean, just on that subject, that's a thing I see as well. A lot of designers, they want to do good research, they want to talk to loads of people, they want to make the perfect experience, and I get that. But you can burn through an awful lot of time and money and never quite getting to perfection. That's that whole thing of what is it? Perfect is the enemy of good. And I think designers really struggle.
Yeah.
But another thing I think is, though, not just designers. Most of the founders I meet, about 80% of the founders I work with, they're not designers, but they're product people at heart. They want to build, they want to create, they want to breathe new things into life. And whenever there's a problem, often building their way out of it is the solution. I'll add a new feature. I'll improve the onboarding journey. Sure. I'll do X, Y, Z. And one of the things I find a lot of those product-minded founders are not good at is the sort of the market side of product market fit. It's the going and doing the selling. It's the going and promoting yourself. I'm kind of curious how you found that part of the role of being a founder, because that's not something designers and engineers and marketers often have to do, is kind of roll their hands up and start selling.
Yes. Again, hindsight being 2020. At the time, I thought I was doing a lot of good work in terms of creating a product that would encourage other business owners to share the word with other business owners. One of my superpowers, I think, is in-person things. And so I would go to wedding expos and meet the business owner there and get them to sign up for my business. And because they had met me in person, anytime someone met me in person, I knew that they would be more likely to stick around as a customer.
And that's sort of the Etsy playlist, wasn't it? Etsy in the early days would just go to loads of events where people were creating crafting things, and just through the charm of being there, they kind of sign people up. So you were using a similar playbook from the sounds of it.
Yeah. And Etsy almost bought Wedding Lovely. It's not something I've ever really talked about. I did go through an acquisition process with them that ultimately failed very badly. They really lowballed me on an offer and I had to turn it down, which was devastating because I was all in on Etsy at the time. I was like, okay, perfect fit for this business I'm building. Like, look at how awesome I am doing. I am going to be acquired by Etsy. And then they gave me an offer where I just had to turn it down, which was so hard to think about. And it really almost killed the business. But yeah, the in-person thing though is I really love that part of it. And that is a part of the startup marketing playbook is, doing in-person conferences and booths and all that. That is a very good tactic for getting marketing. But all the other marketing tactics that are out there, founders should be aware of what other things are out there. And they should be semi-proficient in all of them because one of those things might be the tactic that actually works better for them. And so one of the things that I'm only now learning is how to do sales, how to actually do high level sales. And Wedding Lovely, I just avoided any sort of conversation that was more than, wow, what was I charging? Maybe I was charging like $100 a month. And I thought that was a lot of money. And now, looking back on that, could I have made my business more resilient by building a plan for businesses that was actually at like a business level, like probably cost a lot more, but like what could I have done within Wedding Lovely to create a service that would make it worth it? Because the higher you can get your, lifetime value for a person, how higher you can get your contract values, actually churn generally goes down because then people are staying with your platform longer. They have more skin in the game in a way. And I could have created a more resilient business if I thought through how do I create a higher offer plan and then how do I sell this to folks. And this is one of the things that I agree with you. Is like most founders know, our product people, and it's really hard to go through that thought process of like, how do I charge for money? Because it just feels weird. It feels gross, right? But if you can think about it tactically, where it's like, hey, can I bring people a lot of value, but in addition, give my business more financial stability? Then it's like, it feels like a no-brainer. Just like, that's what you have to do as a founder is figure out how to do that. And so I just missed all of those other marketing opportunities. And I leaned only on the things that I was comfortable with.
I mean, that's a real common thing. You become your own boss because you want to do the stuff that you really enjoy. But I think as your own boss, often you have to do all the stuff that only you can do and maybe other people won't do, but you need to lean into some of the uncomfortable things. And often sales and marketing is stuff that everyone thinks, well, I'll hire someone to do that for me. But really, you've got to figure that stuff out first. And then to your point around, we talked a little bit about in-person events, is a lot of the time, I think the early growth things are often things that don't scale. I think we're taught that because it's a digital, we have to do things that scale and everyone jumps into either social media marketing or performance advertising. Sometimes it is just kind of like going to trade shows, or sometimes it is like sending out a bunch of emails to friends or whatever. Like these things don't seem like they're clever, scalable uses of your time. But to get your first 50, 100, 500 customers, that's probably what you're going to have to do a lot of.
Yes, and that's going to expose you to customer feedback. That's why you have to launch fast. It's why you can't sweat over every single detail of your website when you're in your app and the experience, because once you get it in front of people and you start collecting that feedback, which you should be doing early and often as much as possible, you're going to find out what things, even if you spent so much time in your tunnel looking at all the details, all of a sudden something else is going to appear, like something you didn't think of, or maybe a new opportunity. And so it's kind of like you have to have a strong idea as a founder, something you want to exist in the world. And you create this item, go to your customers, do this in person, do this stuff that doesn't scale, things that matter that don't scale, and talk to a bunch of folks and get the feedback. And maybe the feedback is like your original idea is pretty good, but could be great if so and so and so and so was added. And so if you spent a year launching this platform before you got that feedback, and then suddenly find out you have to re-architect 80% of it because there's like, oh wait, I didn't think about that. Oh, and the customers need this, and there's like a bunch of people wanting to sign up for this. Then you have to spend a whole bunch of other time to relaunch the website, relaunch everything that you worked on so that you can use those customers. It really proves to you. It's one of those things that I think a lot of folks find out the hard way. They have to go through it themselves at some point. They realize that you have to build a little dirtier and just launch fast so that you can start getting that feedback and make sure you're on the right track.
And that feedback, I think it's massively important, but it's also really awkward. Like a lot of people, particularly a lot of engineers are not necessarily naturally comfortable talking to customers. And often when you talk to customers, you'll get a lot of feedback that says your baby's ugly. And that can be really disheartening, and that can be going against your vision. And so quite often people are really good at cherry picking. Like every time someone says it's brilliant, you'll double down and that will be evidence. And every time someone says it's going in a different direction or is wrong, you'll completely ignore it. And often you have to kind of get the first version up and then it maybe doesn't quite work. And then you start adding a bunch of features and they don't quite work. And then like, I'm out of ideas now. And that's when you start actually listening. And really, really taking on board what people are saying. So I think that's a massive skill which is underdeveloped in a lot of founders. I wanna spend a bit more time on the VC sort of world, but just before we move on to your current role, like what was fundraising like for your startup, and what was it like back then? And did VCs take you seriously as a designer turned founder?
Oh my goodness. Okay, so I did a talk at a conference on this process. So I'll send you the link. We can add it to the show notes. It's from 2016, so this is a long time ago, but this is like the first step of actually where I landed, where I am right now. I spoke at MicroConf 2016, and the talk itself is very, it's one of those kind of things where you got to be like really positive, like, look how amazing I'm doing. And I have to like let you know that I ended up shutting the business down, I guess a couple of years later, but it wasn't like doing as amazingly as I said on stage. All the numbers were correct, but I think I had the exude amount of positivity. But the talk itself was talking about my process of building Wedding Lovely and flip-flopping between bootstrapping and venture capital raising. And absolutely do not recommend this to anybody, because the ways that you build a business for each of those tactics, if you're going to go after venture capital, you have to build your company in a certain way, or have a certain attitude around your company, like growth at all costs. You have to have be very tactical, have a big market size, all that kind of stuff. When you're bootstrapping, you can build it in a different way. You could build it a little bit slower, but it kind of changes what's happening underneath. And so for me, going from launching this thing, being like, all right, cool, I'm going to build it this way. I'm going to start bringing in money immediately, because that's what you need to do as a bootstrapper to start bringing in some kind of revenue. And then I got into 500 startups, which has a whole demo day and that whole process. And I was like, okay, cool. I'm going to raise money. And then things happen at 500, which I think is a whole other podcast. Essentially, another startup in my batch pivoted into my space. They were able to put up all this stuff to make them look way more awesome than me. So it pretty much scuppered any chance of me raising any money, because if there's an investor that's going to invest in a wedding startup, they're going to invest in them, not me. There's a whole thing there. But regardless, I wasn't really able to raise money at demo day. I then went into the potential Etsy acquisition, and that fell through. And then the co-founder I brought on ended up leaving me at that point. So I said, you know what, screw it. I'm going back to bootstrapping. I don't need money. I'm just going to build this myself. So I did that for maybe 4 years, back into the bootstrapper mindset. I'd just taken that money from 500 startups, which was $50K at the time. So small compared to today's raises. And after a few years, I had an investor come into me being like, I actually really believe in what you wanted to do. I want to put money into this. And then I got stars in my eyes. I was like, okay, here's an investor coming to me. I ended up taking their money and what was another person's, but I never raised any other money beyond that. No, everyone continued to tell me no. And I was like, hey, fine, I'll just take this money and then I'll go back to bootstrapping. It's awful. As for me trying to grow this company methodically, switching between those modes made it really hard, because if every time I moved back into VC mode, everything had to be upended. The other issue is when I wanted to get out of the business. And if I just taken 500 startups money, or perhaps not their money at all, and bootstrapped, I probably still could have sold the business for some amount of money. Not a life-changing amount of money, but I could have had that glorious acquired business checkmark next to my name. However, because I took in 500 startups money and then these two other investors, it made it really hard for me to sell the business for anything that would be meaningful for me. It would be just a lot of pain, and then all that money would go to the investors and none of it back to me. And I was like, I don't want to do that. I just want to shut this down. So I ended up just shutting it down. All the investors were they understood that was basically, a non-starter in their books at that point. So there was no awkward conversations there, but I really would have loved to have that because a lot of founders out there do that in Silicon Valley. They say, oh, I sold 2 businesses. And then when you dig into it, they just like, sold it for peanuts. But they're able to take that title to everything they do in the future. And so I lost out on that opportunity with Wedding Lovely because I took those very relatively small bits of money. And I really shouldn't have taken any of that because it never, again, this is 9 years of running it. In hindsight, being 2020, never really mattered. Probably should have stayed bootstrapping. Didn't do that, and therefore, I ended up to a point where I couldn't sell my business, and I ended up just shutting it down.
I mean, it's a really common story. I mean, I spend a lot of my time as a VC trying to encourage people not to take VC money because you are setting yourself on a path that, as you say, if it goes really well, it can be amazing, but it's not right for most businesses. As an individual, building a business worth $10 million sounds great. As a VC, that's a failure. And so trying to get people to encourage them to realize that maybe VC money isn't right for them because it might take an amazing business and smother it with expectations. And so a lot of people don't really get that. But there is a trend at the moment. If you come across this trend of like, people call it sort of seed strapping. The idea being like, hey, it's really difficult to kind of build a business with nothing and go to profitability really quickly. So maybe you raise a single check. Maybe nowadays you raise 100 or 250K, and that is just enough for you and maybe a co-founder to get the product off the ground and to start becoming ramen profitable. And the goal isn't to kind of be a huge exit, but to kind of be a profitable business that maybe does a million or 2 million in profit a year, and over time you pay the investor back, maybe not through not through shares and an exit, but through dividends. So I'm curious what your thoughts are of that kind of seed strapping kind of process. Is that something you come across?
I am a huge fan of it because that's what we do here at TinySeed. So Rob Walling is the founder of MicroConf. That was the conference I spoke in 2016. And in end of 2018, he put out a tweet. This is right when I was going to shut down Wedding Lovely, and saying that he was hiring for a program manager for this new accelerator he was running. For me, I was in startup. I was like, I'm going to shut this startup down. I'm going to figure out my other startup. I am unemployable. I don't want to work for anyone. I don't want to have bosses or anything like that, but I need some money in the meanwhile. And so I came across that right at the right moment. And thank goodness I did, because everything that I've learned with Wedding Lovely and bootstrapping and VC, and again, also my very strong opinions about how some things should be done, all came into play with TinySeed. So TinySeed is founded by Einar Volsa and Rob Walling. And the thesis was, especially for B2B SaaS startups, we have a very narrow set that we invest in because these businesses can be very capital efficient. But when you're bootstrapping, forget who coined this phrase, but when you're bootstrapping, there's the long, slow SaaS ramp of death. It's something like, you see a graph and it goes for like 2 years, and you're bootstrapping, you're just like chugging along for years upon years upon, up into the point where suddenly it takes off, and that kills a lot of people who are trying to build or bootstrap a B2B SaaS startup. And so the thesis was, all right, there's a lot of people out here that are building these really cool platforms for other businesses to use. What happens when you give them just enough money? And then you also set up the terms so that they don't necessarily have to raise again. There are so many businesses out there that you don't see in TechCrunch. We did a blog post called like the iceberg of, kind of showing how vast this B2B SaaS industry is that you don't see if you're reading TechCrunch. And the theory for us as investors, because we have to be tactical about this, is that, if we can index into B2B SaaS, if we can invest into a lot of these little businesses, then we as a VC firm can be successful without requiring them to go on to be unicorns. So we invest around 150K for about 10% of their business, 10 to 12%, which is actually very high. But we decided to bring in an educational component because, those bootstrappers who are coming in, building something really cool. What can we do to help increase their chances of success? We can help them learn about marketing, learn about funnels, learn about hiring, give them all this information, have this accelerator program to help them get off the ground. But then also the terms are very founder friendly. We set a salary cap, which is something that's kind of unusual. And it's pretty high. It's at $250,000 US. And so if a person takes in our money, Yeah, if they take in our money, they can still pay themselves a very decent salary for a very long time. We don't do profit sharing or revenue sharing because we want people to invest their profits back in their business as long as they need it. But if there's any point where they're like, hey, my business is successful enough, I want to take more money off the table, then they can, that salary cap limits them to a certain level, and then they issue dividends and we share in those dividends. So the terms are unique. I really want to see these terms be used by other VC industries, because when you start learning about VC economics, I think this is something that every founder should do, is understand what is going on behind the scenes on the VC side or the angel side. What are the things that they are looking out for in startups? And it's like, oh, they're pressuring me to grow big. And it's like, yeah, because that's like part of the economics. For every person that goes on to raise more money, the VC themselves can like add a markup and they look better. And VCs have to do well because they have to raise in more funds, because as soon as the fund is deployed, they have to go through and raise a new fund. Otherwise, the whole thing is over, the way the management fees work. And so all this stuff was really fascinating to me coming in from working at a startup, because I was like, I had no idea it worked like this under the hood. But then also like being able to create this new path for folks. So if this is what would have been perfect for White and Lovely. Absolutely perfect for White and Lovely. I wanted to build a business that worked with other businesses, and having a small capital infusion to help get me through that SaaS ramp of death, get me to a point of being able to invest in growth, and then continue to own the decisions in my company and grow it the way I wanted to. I truly believe that White and Lovely would have been more of a success had it been TinySeed back.
Yep. I mean, I think you're absolutely right. I mean, I think this is one of the reasons why I really wanted to speak to you, because it feels at the moment that there's a big gap in kind of fundraising. It used to be the case that you used to be able to maybe raise funding from banks or friends and family. A lot of that's gone. And so everyone is just forced into this funnel of VC. And you're absolutely right. The way most VC funds work is they are looking for at least 2 or 3 of the companies that have invested to effectively return the fund. And return the fund, as you know, means effectively bringing back to that company the value of the fund. So if you're $100 million, dollar fund, you need 2, 3, 4 companies that will each be worth $100 million to you in your portfolio. And $100 million to you, if you own 10%, is $1 billion. And so you are in the business of hunting billion-dollar unicorns. This is why the term unicorn is so bandied around. And so if you have 20, 40, 50 companies in your portfolio, you're expecting 3 or 4 of them to go really, really big, but the other ones probably aren't going to do that. And some of them will carry on being small, sustainable businesses. Many of them will kind of, like you say, kind of die in those first couple of years and fail to raise follow-on funding. And then obviously what the big VC funds do is, at the end of that, they'll have a couple of big exits or a couple of IPOs or whatever, and they will return a big chunk of the money back to their investors. And usually they're committing to return 3x what you've put in. And so I'm curious, like, how I get that model in VC. How does that work with you? Like, what are you raising? What are you returning? How are you getting that money? Because if they're not IPOs and they're not, maybe there's a few sales, but is it mostly coming through long-term revenue, through dividends, or like what's the model exactly?
So we're still relatively new. Fund 1 was raised 6 years ago.
Sorry for interrupting, but one of the reasons I was asking is you mentioned a while ago that you're only 6 years in, but already you're considered sort of top 5, 10% percentile for your vintage.
Which, because we returned the funds.
And you've had some carry already.
Mm-hmm. Yes, yeah, exactly. And so that's a huge moment for me as an employee to because you don't really get equity when you're working in VC, and so to have some sort of upside from businesses once you return the fund, it's only because the other thing I didn't really realize before I jumped into VC is that say a VC firm has a few startups that go big, that money doesn't come back to be being used by the VC firm. It goes straight to the LPs. And so, when one of our startups get acquired, us as the management, for the employees that I work with, it's not like we suddenly have more power to hire more employees. It's all based on the future raise. So the metrics, being able to continually raise new funds is very important, and having good results on our earlier funds to make it easier for us to raise new funds is very, very important. So Fund 1 returning was a huge milestone, especially because we did it in only 6 years. And that primarily is through a few big acquisitions. Now, Fund 1 was not that big. It was only around 5 million. So you can imagine, we invested in, what was it? I think it was 20 startups in Fund 1. And so of those 20 startups, there has been a few people who've died as a startup, rather. But there's been a few very significant acquisitions in that batch, which meant that we were able to return the funds to the investors. Now they're starting to get returns above what they put in. I got carry as an employee, which was kind of amazing. And it happened to coincide with us raising our fourth fund. We're currently fundraising right now, actually, if anyone wants to be an LP. But it came at the right time for us to say we've returned the fund so we can roll that into our fundraising for Fund 3, which is going to be around 15 or so million. So not anywhere near where some of these other VC firms are raising. I think our total assets under management is around 50, if I recall, with all of our funds. So we're still relatively small, but we are getting acquisitions, and we do have a few startups who are giving off dividends. But the other reason why we invest into B2B SaaS is that it's a very sticky business. And because we don't need unicorns, there's a lot of folks who are in Fund 1 and Fund 2, our earliest funds, that haven't gone under, but they haven't been acquired, but they're still just chugging along. And we track all of everyone's metrics, and we can see every month they're still growing. And there's quite a few folks who are now like 6 years in, they're finally at like $1 million ARR, which when you look in the VC world, 6 years to get to $1 million ARR, they're a failure. But for us, it's like they're just going to continue chugging along and, grabbing more market share and getting themselves put into a place where that can be acquired. And their acquisition, the amount that they'd be acquired for is still a win for TinySeed, when it wouldn't be for other VC firms out there by the way that we've structured our fund. So we have a lot, even though we've already returned, there's still a lot more upside to come with the current startups in Fund 1.
I guess it's also, you're looking for a different kind of founder, aren't you? I think a lot of the founders that the VCs have, they want to grow really big or go home. And so if they're kind of taking 3 or 4 years to kind of get to $1 million, there's a really good chance they'll quit and go and join Google or, some AI company. Whereas it sounds like you're finding founders that have got a real passion for the business. And actually they want to build a business. If they get acquired, that's great. But if they're doing 2 or 3 million a year and they're taking home, $500,000 in profit a year, for them that's a really good outcome, and for you that would be a good outcome. And I guess also to some extent because of that, you have a smaller hit rate in terms of really big outcomes, but you also have a massively smaller failure rate. With a VC, it might be 95% of their companies fail. With you guys, it might be 50% or 40%. So yeah, it's an interesting model.
Yes, yeah, totally.
I'm curious sort of what your previous experience as a designer and a founder bring to your role now as a VC. Does it help you pick the right people? Does it help you give better advice? Like, what is it that's unique that you bring to the table?
That's also a really good question. I think we have been lucky to land in a place like TinySeed because the program itself needed to be designed. We needed to figure out like how we were not like what's the education we wanted to give, but how we wanted to give it. And I had a very strong idea in terms of what is that experience going to be? How is it a message to the folks who are in our portfolio? How do we make it easy for them to respond? How do we make it easy for them to attend these events? Because I know like the more I can do to make this process of learning and getting it learning and connecting with other founders and being a part of this community and just sucking in as much as you can. Like I can affect that as a designer. I can affect that in the way that our messaging works. I can affect that in the way that the process goes in terms of how you get onboarded into TinySeed. And I think we've done a really great job with that. It's very important to me. We want to invest in startups and the kind of folks who are down to earth and super friendly and very willing to learn from others, but also have this undercurrent of ambition. There's a lot of folks out there who are bootstrappers that want to build to say $1 million, and then that's when they want to sell. And we do have some amount of VC metrics where we're like, we can't invest in you if that's your goal. You are like, Godspeed, have fun with bootstrapping. We think that's a really great option for them. But people come to TinySeed, there has to be some level of ambition. And then for me to kind of think through, all right, cool, these are the kind of folks that we're working with. How do I design this experience to work best with them? And so this involves and I say design, I'm using it very broadly, but it's a thought. It's like thinking through the attention to detail that you need running something like this. How do we run our in-person events to attract the kind of founders that we work with? We do something a little bit different than most folks out there. Our events are very tactics oriented. They're very lots of information. They're very focused around community. They're not Tony Robbins. There's no get into a room and everyone stands up and rah, 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 and all that kind of stuff. There's other folks who do that and they do it very well. And there's a certain kind of startup that is attracted to something like that. That's not TinySeed. We are down to earth, friendly people who are ambitious. We as a team, we're very ambitious people. The people we work with are very ambitious. And there's this thoughtfulness in terms of how is our website going to look when we do this? How is the process for all of our programs going to look? How do we attract people like this? So I'm not doing a lot of work, design work. I built in our backend that we do for all of our LPs. That was fun. For a brief moment, I got to build a new platform. It's where all our metrics come in for our startups. Goes into this platform. Everyone can see, all the LPs can see the metrics on the funds and how things are going and where the startups are going. That was super fun to build. And I got to flex my design muscle on that. I also built our application process. And so it's a custom application form built off of Python and Django because I wanted to have that experience of filling in an application to be as seamless as possible and have these little moments of ooh, okay, these people care because this application is so well designed. I didn't want to just throw in a fill out form or anything like that. Love fill out, use them for something like an application process. I got to flex my design muscles to make sure that experience was as well designed as possible. But I'm not doing a lot of design work nowadays, but all of that has translated into thinking about how we run as a company. And I feel like that attention to detail, that attention to experiences, that plays a role in everything I do at TinySeed.
Yeah, I hear you. I haven't designed in anger for 10 or 15 years, but I have that kind of design thinking, kind of problem thinking mindset and thinking about how people experience things from first principles. I find that really, really valuable when I'm talking to founders. A lot of the time, founders are thinking architecturally, they're thinking in terms of systems, but they're not thinking in terms of how people actually experience and whether it makes sense. A lot of the time, they're super users. And so they're building a product with that super user mindset. And often, the people who are onboarding, the people who don't understand their language and their kind of nomenclature and organizational structure really, really struggle. And so it's just kind of getting them to think with a beginner's mindset, I think, is a real useful skill. Just before we move on, in terms of how TinySeed works, so you're part VC and part accelerator. How do the two elements kind of blend together? And can I just take your capital and not be part of the accelerator program? Or does everyone have to kind of go through a process? And what does that process look like? And what do I get out of it as a cohort?
Yes. So it's all through the accelerator. We just invested technically we have a syndicate, and so there's other kind of ways you can be a part of TinySeed. But largely, if you are coming in to take investment, then you must go through the accelerator because we believe so strongly in the accelerator process and how that year goes. So it's a lot of accelerators out there are 3 months. Ours is a full year and nothing really changes at the end of the year either. I think it's a year of training people to be TinySeed founders, training them in the way that we want to think. We have 3 months of modules that we have them go through, learning about, like I said before, marketing and sales and hiring and whatnot, because it's the platform of information we want everyone to have. And then we start pulling in the experts that we have in our network. And because we are B2B SaaS, it means we can have some very specialized folks as mentors. Some people who are copywriters and people who are user experience designers and all the little pieces of B2B SaaS that you need to learn. And we try to speed up that information gathering process for when people are jumping into a new area. Say they're jumping into, how do I hire a customer success person? We have a person who specializes in customer success that we connect them over and they can get all the shortcuts they need to be as effective as possible, as fast as possible. So the year program is very important to us. There's no way of taking investment from TinySeed outside of the accelerator. We are building other programs because, the accelerator investment is not for everybody. Because we work with bootstrappers, there's quite a few folks out there where they might want to be part of TinySeed, but not take investment because, like I said, our terms are 150 for 10%. And if you're making $1 million at that point and you want to have access to our expert roster and you want to have access to the team and get a part of this community, there's no way you're going to take investment because that's a very bad deal at your size. So we've just launched a new coaching program. So that's a paid program outside the venture capital thing. It's called SaaS Institute, where it's like taking everything we've learned from the accelerator, but bringing it to folks who have bootstrapped B2B SaaS and grew to that level. But it's all about this, like, how do we, for both Accelerator and SaaS Institute, it's like, how do we work hand in hand with startups to bring them not only as much information as possible to help them transform, or at least, like, I guess, use the shortcuts to build their business quicker, but also how do we encourage a mindset? And you've talked about this before, where it's like, there's a mindset of breaking out of your tunnel vision. There's a mindset around like being able to ask people for advice, but like not necessarily take all the advice you get, but being very strong and like figuring out how to do this information gathering. There's a mindset of like, you grew to a certain level and it's so down. Like, what do you do at that point? It really sucks. But you have to have this, like, I've thought about getting a t-shirt with relentless forward momentum on it for everyone at TinySeed, because that's what you need. Just relentlessly figuring out how to continue your forward momentum. And if a marketing channel stops working for you, there's this mental aspect of being like, all right, cool, whatever. I have to move on to the next thing. Let's try the next thing, and not just give up at that point, which is mentally very hard. It's very hard to do as a human. So I think TinySeed has really created a founder community that is both encourages a, not a growth at all costs mindset, but a very growth focused, but sustainable mindset. And both of those things play a part in that. And that's what we've tried to do with all of our programs, is to encourage that kind of mindset.
I mean, it sounds great. I love what you're doing. It's clear that what you've done is you've thought really deeply as a team around the skills that founders need, the things that trip them up, and you've created this program that kind of helps guide people in the right direction. Like you say, give them the momentum and support they need. I mean, it's kind of where my book came from, that sort of plugged over my shoulder. Like, for the last 4 or 5 years, I've been working in VC as well. And I've seen the same kind of problems and issues trip people up time and time again. Rather than producing a training program or producing an accelerator, I put it all into a book. And actually, we should probably chat about getting the book into the hands of a bunch of your founders at some stage.
That's
I think
true.
they really value it. But
yeah.
But I'm kind of curious, like, what are the things that you see trip founders up all, time and time again? Like, what are the common patterns that you are desperately trying to kind of educate founders to avoid, that you see all the time?
So the funny thing about the kind of founders we work with, we aim for folks who are information hungry. And, when we're doing our application process, we accept actually a very low amount of folks from, it's something like 5% of our applications get accepted. It kind of varies by year. This year was crazy pants with, we just closed our application round, and the number of AI wrappers that came through was kind of hilarious. And it also just kind of shows, where the industry is moving towards. But we want to work with people who are information hungry, but there's also the kind of folks that come to us tend to be, and again, this is the kind of person I was, someone who like loves to learn, and their process of sitting down and trying something, and they want to just like do it their way first before they start asking questions. And what we want is people who are like very excited about sitting down and doing it their way, but also ask questions first. Like, you got to do this information gathering process in the beginning, rather than, say if you're, again, designing a sales process. Some folks would be like, cool, I'm a founder, I'm going to leap myself into the sales process. I'm going to read a bunch of articles and just jump in and do it. And we were like, pause just for a little bit and just do a little bit more information gathering. Can you talk to experts who've done sales before? Can you talk to peers that are also in this process? There's this balance that needs to happen between, I guess it's like, you got to move fast and break things, but you also have to do as much information gathering as possible. Where is that balance? It's going to be different for every person, but a lot of founders tend to not do enough information gathering before they leap in and start running things. I think they want to learn it for the hard way too. Like, you go into the sales process, you lose a bunch of things, you learned a lot in that process, but maybe you didn't have to do those first 3 disastrous calls if you heard from like 3 other voices first. That's something I'm constantly thinking about, is like, how do I do that myself when I'm trying to jump into new things? Because I always just want to like jump in and do it the hard way. And all the founders that we work with are kind of the same way. But you also don't want them to like spend forever doing the information gathering process. And so there's like a weird way of encouraging. You got to encourage some amount of flexibility, but always encourage the like break out your tunnel vision, learn as much as possible about these areas. The worst thing would be is if someone doesn't want to, like, they don't want to do sales whatsoever, so they're not going to do it. And that's, I think the flexible mindset needs to come into play, where it's like, okay, cool, product-led growth isn't working. Maybe you need to try doing sales. Yes, sales is very uncomfortable. What can you do to learn as much about sales to make it not uncomfortable anymore? And so, that's where the information gathering process could help that as well. It's just like, just demystify something for a founder who is learning a new area.
Well, look, brilliant. I could chat for ages. I think I've only gone through about half of the questions I had for you, but I'm conscious that we've already hit the kind of hour mark. So look, it's been fascinating hearing first about your early journey and your startup experience, then obviously what you're doing at TinySeed. I think it's a really useful and valuable thing as well, as we talked about. Like, there are far too many like VC companies looking for huge, kind of unicorn exits. And I think there's a real gap in the market. And so I would encourage lots of people that want to build kind of, small but successful, sustainable businesses, and small could be like 10 million, 20 million in valuation or revenue or whatever. So it's not tiny in the grand scheme of things, but in the VC scheme. Where can people find out more? Where can they find out more about you? Where can they find out more about TinySeed? Let us know.
Yeah. So I'm not really on social media nowadays, but you can find me on most places under Tracy Makes, Blue Sky, Instagram, and whatnot. But for TinySeed or tinyseed.com, we have a sister business called MicroConf. It's actually the same team, it's just under a different website. MicroConf is usually where people find most of our information, because it's our public programs and our big founder community. And then TinySeed are the 2 programs on top of what we do at MicroConf that are selective, and we only work with a few different founders. So I came in with TinySeed, but now I'm the head of product for TinySeed and MicroConf. So you can find me in both of those places. So if you're in B2B SaaS and you want to build a sustainable business, but you still have some amount of ambition and wanting to grow to a life-changing exit, take a look at MicroConf. There's a lot of bootstrap businesses out there that have that same mindset, and a lot of people who are just really willing to help out and talk to folks. We have a mastermind matching program. We have a private community. And if investment's right for you, we have our accelerator. If investment's not right for you and you're a certain level and you just want coaching, we have this new program that called SaaS Institute that helps people coach. But TinySeed is the program side of things. MicroConf is the public community.
Amazing. Thank you so much, Tracy. It's been a pleasure chatting to you.
It was great to catch up with you, Andy.
See you soon. Bye.